Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. I want to welcome those of you that are back and those of you that are for the first time. Welcome. Before we continue, let us go to a disclaimer. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website or presentation is neither a solicitation or an effort to buy future stocks or forex, nor representations being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. So, welcome. Good morning. Today is non-farm payroll. We will be seeing what the jobs report for May was, and this is usually the most important day of the month because everyone trades. So let's take a look and see what numbers we have that may be coming out in the next 10 minutes. Okay, so you got Canadian trade balance coming out. Great. Labor productivity for them. U.S. average hourly earnings. Non-farm employment change. Last month was 160. Expected 159. I think it's going to come in less. Unemployment rate, I think it'll stay more or less about the same. Trade balance, we'll see. Fine services PMI, you got ISM, non-manufacturing PMI, factory orders. So it should be an interesting morning. You know, we'll see if we can identify some trades right now real quickly. I was looking at the US yen, and to me it looks like the yen is going to get stronger against the dollar. We'll see. You know, I don't like these power dots here where they are. This tells me that they're going down, and the fact that they've been using the trend stop on the 7-minute tells me that they're going down. They initially began this a while back, so you know, I'm not bullish on it, but I'm not jumping the gun quite yet either. The euro sort of already overstepped and started to go bullish. So this one's a little bit on the weird side because don't really know which way they're going to really run, but they've already ran high. So, you know, you're talking about a good 20 pips before the announcement. So it's as if they're acting before they know what's going to happen. I also looked at the Euro Aussie also started set up that way, and the Euro New Zealand. So it's going to be a very, very interesting morning. Let's give it a minute for the charts to come up. See, Euro Aussie is already set up to go long. You have buy signals here and here. This to me is they're trading right off of the mean, which is the moving average. I actually like this trade more than the euro itself. I feel this could be a really, really good trade. I saw it here. Basically, euro gaining strength against the CAD, dollar, Aussie, New Zealand, Swiss as well. This one to me looks a little clean. The US yen looks clean to the downside as well. That's why I'm saying it's, if we add the volume indicator right now just on this one alone, we might be able to, I'd like to say, pinpoint this trade more than the other. Sometimes trading the euro itself can be a little difficult on this day because they like to really go aggressive. give it a minute to come out. Still got 7 minutes before the announcement. Excuse me. Come out wherever you are. I think I have too many days for data. Yeah, see here we have volume divergence. These two, this one ended up closing higher. So we have volume divergence here. This one ended up closing higher. And this one as well. Both of these were bullish. And as you can see, they're playing that. My only concern is that, you can never really tell what they're going to play until they play. So I'd like to really just, this one was bullish as well, and they held right on it. The problem is that they don't respect stops on this day. This is like the last day they respect stops. So I do like this one bullish though. I'm a little bit on the edge about it, about jumping at it, but it does look good to me. Let's take a look at the US yen real quickly because that one looks a little transparent as well. With the US yen, because it's also one of those where they basically just swing to the hill and to the bottom, they could go short first and then go long. Because this one's the opposite of the previous one. This one, in actuality, we got the signal to go short here in this candle right here. It's our perfect signature pattern, and this one here. This is a 7-minute. And the reason I'm using the 7 minutes is because they love to use 7 minute on NFP. So you have volume divergence from here down, and we haven't seen anything else. So from here to here, we have volume divergence. That's a big, big stepping stone. That's a big gamble too. It's one of those where basically, and one of the things that I like about this one is that they are trading below the mean. So they're right there. But I'm afraid that they're gonna go up and then down. So if they go up, you're talking about 25 pips. That's too much risk to take on for a trade right now before they come down. But this one to me looks as if it's swinging down. You have volume divergence, you have price action divergence, you have an anomaly between price action, the point of control, volume divergence. You have it here as well, 2 candles. You have the trend stop going down. You got 3 minutes before, the actual announcement. I mean, everything on this one says short. So when they've initiated short here, you have volume divergence here, and then they came down here. So you also had it here. So they've been setting this up. Now, normally, I don't really like to jump in a trade beforehand, but you trade at your own risk. I think this one will go down. If you do trade, then you should put your stop loss literally, and I mean tight. 10 pips, that's it. And hopefully they'll follow through. Normally when they start to do this, it means that they could go the opposite direction. So with 2 minutes to spare, I really don't like the fact that they're doing this. It bothers me. Um, but there's still volume divergence to the downside on the 7-minute. So this is really one of the very few trades that I actually feel comfortable at this time of the hour, right before the announcement. But if I see that they shift, if I see this one's, become bullish, then I may close the trade literally a minute beforehand. So it all depends on how the volume's coming in. So far, there's more bearish volume than bullish volume, and it's been reacting to it. Let's wait and see. It'll be interesting, if anything, that's for sure. you know, um, they must know something that I don't, but I'm not real comfortable with it, to be quite honest with you. But every indication is to the downside. Now, if you're not, if you're not really, if you want to wait for the announcement, which is usually the smartest thing to do when trading NFP, I always tell people sometimes it's better to wait for the announcement after it comes out than basically just close the position, get out, and just wait. See, this is what what I don't like. I hate when they do this. They attempt to go up, but realistically, their volume is staying down, and that's what we're going to find out right now. Out of all the trades, this was the only one that looks a little transparent, so let's see what happens. Let's see how they start to play it up slightly. This is right below, and there it goes. See? Out of all the trades, this was the only one that looked legit. And at this point, nothing more to really talk about. I'm out. That's it. Don't need to do anything more on this trade. It hit, and we're done. We got in here at 108.84, got out here at 108.28. Not a bad trade. So we missed another 10 pips. Believe me, I'm not sad about it. Sometimes the best thing, if you're going to hit a trade, hit it hard from the very beginning, and then just go back and look for another one. Let's see how far this one goes. Is it probably going to go down 80 pips? We actually took, I think, close to 60 pips out of their high. They may go down the full 100 pips. We'll see. But you can see the accuracy behind the technology, the indicators. They gave us a signal on the 7-minute, literally 4 candles before the announcement, and 1, 2, 3, 4, 5, 9 candles before the announcement. 9 times 7 is 56. That's an hour beforehand. We basically got lead on this trade. Now, I'm not jumping back in on this trade because I really don't see the need. If on NFP in the first run you basically hit them for 50, 60 pips, then pretty much you've done your job for the day. So at this point, it's really more a matter of just waiting for the next trade and looking to see if there's something else. Now, normally I like to look at gold right after the announcement because when you look at gold, it's very, very interesting to see what happens. And let's take a look at that. I knew gold was going to spike. I had a feeling, son of a... Let's see, where did it go from? 12.14 to 12.29. That's not bad. That's almost a $15 move. Give me a minute. I'll be right back. Just watch this trade. Okay, let's see this thing. Seems like it's still running. It's a shame. But it was either this one or the US yen, and to me the US yen looked very transparent, even though in this one we had power dots, something that we didn't have in the US yen. And I saw this earlier and I said, this looks good. They were trading right off the mean. The signal was actually here. This was your signal, 4 candles before the announcement again. Beautiful trade, $20 move. Can't go wrong about that. And you know what? It's going to continue. This one is actually going to, I like this one, because usually gold does something very unique. It will usually move on NFP between $30 and $40. It's been very consistent in that regard. You know, I'm not willing to risk more than 10 pips on this, to be quite honest with you. But most of the time, this thing ends up moving, you know, an additional few dollars. So we'll see if we can capture something out of this. I'm really not looking for much. I'm looking for another dollar move, to be quite honest with you. If it gives more, great. I'm looking for 10, 15 ticks. Oh, and it gave me more. And see, that's all I needed. And so now I'm out. Don't need more than that. So that gives us 2 trades for the morning. One on the FX side, which basically we got almost 20 ticks out of it, and it's still going to go. Like I said, this one usually moves, you know, $30 to $40, but I wasn't looking for more than that. So you can see the benefit of trading both futures and FX in that regard. Let's take a look at the Dow futures. Let's see what this one has to say. And of course, they're interviewing Bill Gross because he has such a big mouth and he knows so much. The Dow futures went straight to the hill. Well, actually, the wrong hill. It went straight downhill. Now, your question is, was there a trade here? Was there a signal to go short? And I'm going to give you the answer, and the answer was yes. This was your trigger right here. This was your candle. This was it. This is where you see the imbalance between the points of control, price action. You see how here it started to settle down and you had volume divergence. See, these are very important keys, guys. You know, what we've done is pretty much broken their code. I mean, we've literally slapped them silly. They don't realize it, but we've done it. No one else out there has has been able to decipher their encrypted mathematical trade. This is a pure mathematical trade. Now, the fact that they hit this here and this came down too much, they came down way too much, and so now this is giving us the pattern that we normally like, except I think that they'll probably come down slightly and then retrace right back up. You know, it was too much of an aggressive move to the downside on this one, and normally, see, it's already starting to go bullish. I can risk, I'd like to say 10 ticks on this, but I'm not, you know, I'm not happy about it, to be honest with you, because it was very quick, and I'm afraid that they're going to come right back down and retest. So I'd rather just wait. You know, we've got 2 trades for the morning, and sometimes just want to hold on, you know, not jump the gun. Let's see what it does. You know, 6 ticks, 5 ticks, 7 ticks. I could have made 7 ticks. But I'm afraid it's going to come back down, though. That's why I'm not keen on jumping on it. It could be a real disaster. So it's not one of those where I'm like, let's go. No. We're going to hold our horses, buddy. No, we're going to chill. We ain't going anywhere. Now another one that looks good. See, look at that. That was a good 10 tick move right there. See, told you. 10 ticks. Not bad, but not great. Came down like 80 ticks practically. 60 yeah, almost 70 ticks to the downside. Not a bad trade. But I'm not, again, I'm just not sold on putting myself at risk right now. I'd rather just relax, chill. See, the sellers aren't willing to sell higher. The buyers are willing to buy higher, so that tells me that there's something wrong with this trade. And it's going negative. See what I mean? Treacherous dogs. Excuse me. I shouldn't say that. But that's why I wasn't that, keen. And plus, it's all negative right now. I mean, this thing just went, look at the volume on this. They've been on the kitchen sink. 1146 on the buy, 1393 on the sell, 257 negative. This one still has room to go down slightly. I'm afraid that the trade to the upside wasn't the one that everyone was so keen on. See? That's why, non-farm payroll can be very treacherous because it has so much volatility that you can make a mistake and give right back what you made. That isn't the point here. Here the whole point is to what you make, you keep, and you wait. In this case, we wait. We don't jump the gun. Normally, I'd love to jump all over this one. I would, believe me. No one knows better than me. I would love to take their high, but I think that we've done plenty of damage to them today. We're up the equivalent right now of that trade that we got out of was approximately, it was 560, so it was approximately 70 pips. We took 70 pips out of their first move, close to 70 pips. And then on gold, we took 19 ticks out of them. So, I'd like to say that we're very close to 90 ticks, 90 pips right now, the equivalent of, for the morning. That's not a bad morning, especially for non-farm payroll. Now, crude is a very treacherous dog, and I like this long. And let me explain why. Even though this looks short, see the volume divergence coming in? I'm willing to risk literally 5 ticks because of volume divergence. That's my only reason. I'm not willing to do more because you have volume divergence from here this way. You see it? Go, baby, go. Make me a happy camper. Put a smile on my face and everyone else's today. Give us another 10 ticks. Come on. Give it up. Move it, move it, move it. This would be our third trade. And then I would say it's time to relax, take a chill pill, don't get emotional, and just keep it simple. Let's see what it does. The bullish volume's coming in, but it's not reacting as good as I wanted it to. Not good. See? They're playing it. Let's see. I still think they're going to push high, but we'll see how high. And I'm not looking for more. I'm looking for 10 ticks max. 10 ticks is all I'm looking for in this trade because of volume divergence. But they're fighting it too much that it makes me sort of wonder if they're going to play it. And at this point, now I'm getting really concerned because there's a lot of negative volume coming in. And maybe it's time to exit the trade. Yeah, I'm not willing to give up more. 6 ticks is all I was willing to give up. That's it. It didn't play. I knew the risk, and that was my risk. If you stick to your rules, you will not lose more than what you stick to your rules. Your risk in many trades should be 5, 10 ticks in futures. 5, 10 pips in Forex. In this case, that's all it was. You know, are we down for the day? No, 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 not at all. You know, was there volume divergence to the upside? There was. Did it play? No. But see how they're playing it now? They want to go long, but they're unsure of themselves. And so I'm unsure of them based on what they did. Now, if this one plays, it's still negative. I don't like the fact that it's negative because that tells us that they could come down further. So even though it's holding here, I'm still hesitant about jumping in because it's doing it. If it closes right above this pivot, then at that point, you know, I may be interested. But now you have volume divergence to the downside, which is not good. So this could be a retest before it comes back down. So if that's the case, then, you know, again, you assess your risk. Do you really, really want to get back in? If you're unsure, and in this case we're unsure, the answer is no. So let me tell you what you do next. What you do next after such an event is, see, I wouldn't have made anything because my entry was here. I'd still be down. What you do next is you go look for something else so that you're not tempted to play this game with them any further. It doesn't feel right. It doesn't feel right. It is what it is. Now, let's take a look at the Swiss, Aussie Swiss. That one looks interesting. This one's going short. It's holding, but it's going to go short. Watch. Let's see how short it goes. I won't risk more than 5 ticks on this one. Again, I know what, you know, I know what my risk is, and that's as far as I'm willing to go. Let's see. If it doesn't break below, then I'm gone. Let's see. Come on. Go, 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 go. No. No, no. Come on. Go, go, go. Let's see. Go. No. Maybe so. Come on. If you're going to hit it now. No, it's not going to hit it. See? It might. They say patience is a virtue, but my God, you're really pushing mine. Maybe. Maybe. No. Oh, yes. Here we go. There. I recovered 4, 5. Let's see. Does it go more? Maybe. 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 There. Come on. Keep going. No. Maybe. Yes. No. Oh, yes. There it is. That's as far as it's going to go. Oh, beautiful. Look at that. Who says that we can't pinpoint these trades? See, at this point, I'm out. I don't need to do more. I recovered the five ticks that I lost, and I picked up 7 more. This is what I call a quick scalp. And if you're going to scalp with your system, then know when to do it and when not to. So in this case, the volume was just all over the place. And see how it came right back? That's why I said sometimes it's better to just get in and then get out. So now we're 3 for 4, practically. Maybe now it's time to go look at that Aussie Swiss. Let's see. Aussie Swiss franc, and I'll explain why. My buddy Arjun, how you doing? Where's your dad? second. Now, the question you have to ask yourself is, where do you normally see this amount of trades made in non-farm payroll and have the results that we just, because I haven't seen anyone else out there do what we're doing. Okay, so let me remove the volume indicator because I'm going to have to, no question about it, and then put it back on because I was manipulating it in the future, so I got to bring it right back on. It's not a big deal, believe me when I tell you. You know, the one thing that we have when we trade is time. Time is our best friend. There's nothing better than time. Now, here they're trading at the mean. As you can see, they went down. It hasn't been a big trade, but I'm thinking there's a really good trade setting up on this bad boy. And this is one of those that I'll explain why. And it's already hitting, but I would not have taken this trade quite yet because of the way that it swung. But I think that there's a play here, which is very interesting, and I'm going to explain why very shortly. U.S. had 38,000 workers, fewest in almost 6 years. Not a good thing. Actually, let's take a look at the numbers real quickly to see what they were. And let's hit it here. Okay. So trade balance was actually not as great for Canada, but labor productivity was good for them. Average hourly earnings for the U.S. maintained status quo. NFP less than expected, and I mean less. This was just sad. Unemployment rate stayed, almost about the same. Trade balance was a little better, but it didn't reflect it. And we're having final services PMI and ISM numbers right now within the next 9 minutes. That could be another trade. We look forward to that. Let's take a look at this thing. So why am I looking at this? This one says Swiss franc is going to get stronger against the Aussie. Why? Because the Aussie and the New Zealand are starting to come down, and the Swiss is starting to gain strength. We haven't seen that happen, but now we have a power dot. And when you have and normally this one will usually give you the signal, when they're at extremes, right before it happens. So in this case, because of this power dot, now I'm looking for volume divergence. The question is, do I have it? The answer is not here. This was volume divergence to the upside. Okay, don't confuse. But now this is volume divergence to the downside, this one here. So someone's lying. Price action and volume divergence are to the upside, or they're actually going to come down. I think they're going to come down. So if they're going to come down, and I hate when they start to come down right before I want to come down. I wanted to come down with you. You weren't supposed to do that. Go back up a few pips so I can jump in. Now, based on this, see how this one lined up right with the trend stop and that. So now I can actually, from this point, oh, look at that, treacherous. That was a treacherous move. But you know what? That's okay. Come up a little bit. Come up. I know I'll get a better entry. Come up. Come on, be mine. Make my day. See, I'm willing to, in this one right here, if it goes up again, yeah, this is far. I don't think it's going to go up any further. 71.84 would be my entry. Because we have a power dot here, I'm willing to risk to put my stop loss above this 71.88. So I'm willing to risk 4 pips, but I'm thinking they're coming down. They've already started to come down. So let's see how, ho, 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 Merry Christmas, said the gent. And so let's see how much of a merry day we have today. See, that power dot gave them away. Oh, I'm trading off of a 7-minute. This is something that most people don't do. Now, because of this, at this point, since they hit the mean, I'm thinking that they may not do anything else. And so to just be sporty about it, I may just want to take what I got, but I think they got another candle ready to come down on this bad boy. So they're setting up for something. But if I want to be conservative, then at this point I may say, no, yeah, I'd like to be conservative, but they're making me be unconservative by giving me more. So if they hit the pivot, I may get out right there. Come on, hit the pivot. Hit the pivot. Hit the pivot. Hit it. Come on, slap someone. Make sure you hear that. Give it that effect. Hit the pivot. Hit the pivot. Hit the pivot. If you're going to break through the pivot then. They're not hitting the pivot, but they're so close. See, at this point, I may just want to go and say, thank you very much. I'm out. And so now we have 4 out of 5 trades that we've hit. Now at this point, with 4 out of 5 trades on non-farm payroll, and our third trade was really just, a stop loss, 5 pips, 5 ticks. It's nothing. Then at this point, what you want to do is basically step back, say thank you very much. I've punished you enough as it is, and I may want to take a break and just relax. Sit back, relax, have some coffee, add some stevia, not sugar. Sugar is bad for you. Brown sugar is okay, but I'm a diabetic, so it has to be stevia. And just think for a moment. What did you just do right now? You just made 5 trades that yielded you the equivalent total of about almost $1,200. And on top of that, you did something more important. You were in a trade right before the announcement with the US yen. And you were able to decipher their real trade before it occurred. Now, granted, it was, a 100 pip move, and we took close to, we'll measure it right now and see how many pips we took out of it. But I want you to understand that, this day is one of the most important days of trading because there's so much volume, so much volatility, so much liquidity that they're rebalancing their order books left and right. They're doing everything possible to rebalance, which is a wonderful thing. We like when they do such things. But more importantly is that in every trade, we've been able to decipher their move. See, we got in here, got out here. We should have let it run, but like I said, sometimes when you have them, it's better to just make your trade, walk away. 55 pips is what we took out of the original move. The total move, if we would have stayed in it, would have been from here all the way here, 122 pips. I don't feel bad that I didn't take 122 pips out of their hide because I took another 4 trades and made that. And I didn't have to go through the psychological headache that they put you through. You just move on and you go make something else. So I made 55 pips out of a 122 pip move. Not bad. We made practically, 15 pips out of the Aussie Swiss. We made, let me see, 7 ticks out of the, what do you call it, crude, and we made about 19 ticks out of gold. I call that a great day. I call it a phenomenal day, quite honestly. So it ain't over. Let me tell you something. We still have maybe one more trade to find. So, and the reason why I took it is because the Australian was starting to basically weaken here, and the Aussie was coming up very strong. Now, this indicator does a lot because it helps you to identify in FX when they're taking something out of balance. Excuse me. And it takes me about, I'd like to say, a day to teach people how to use this indicator properly so that it leads you to the trade but doesn't give you the trigger. And that's okay, because we look for other things with the software to find the trigger. We look for anomalies in price action, volume. And this thing still wants to go down slightly more, but we're late, and after a trade like this, I'm okay of being late. I don't mind. But the whole purpose of today is to demonstrate and show you that sometimes in NFP, they'll give you the right signals. And if they do, then you have the potential of making between 4 and 5 trades. And I've always said that every morning you have the ability to make between 4 and 5 trades in each session, whether it's the European, whether it's the Asian, most definitely the US. European and US are by far my favorite because there is always something that can be found. You can find at least 2 trades minimum. So, and if you do that every day, then you're a very, very a gifted person, and more importantly is that you're starting to build wealth and consistency. That's what this is about, building something. This isn't impossible. This is achievable, but you have to believe that you can learn it. I always say that we're never too old to learn, and today is one of those days. Let's take a look at the euro and see what they did with the euro. Since they whipped and beat everyone on the euro, that's why I didn't want to trade. I was like, nah, not today. No, today we're going to sit back, relax, enjoy the morning. And we still have an hour before the other announcement. So it's one of those where basically you just want to really sit back and evaluate now that we've made 5 trades. Because there's one more trade left, I'd like to say. No, it was directional. The euro was directional. The jobs report was negative, but now, see, there's an imbalance here. The sellers are willing to sell higher, the buyers are not. Same here. And you have volume divergence here. Now, being that said and done, doesn't mean we're going to short it, because this can be somewhat deceiving. So at this point, we're just going to watch it, but I really don't see the potential of seeing a trade right now there. It is what happened here. How did this happen? Oh, God, I hate when they do that, man. They really just get under my skin. Okay, so now we have the volume indicator up here. I don't even know how I did that. Maybe for the best. So let's... God, how did this happen? I don't even know what I touched on the pad of my computer. It is what it is. Let's continue. Let's look and see what do we have here. Okay, is there anything rebalancing? Pound CAD looks interesting, actually. We may be GBP CAD. See, the euro is going to continue to go long. I just don't trust it. So, let's see what this trade does. We may find our 6th trade. Excuse me. I want to catch a cold, but I don't want to catch a cold. I have a 4-year-old just turned 5. Oh, God. He's the one that gets me sick. There's nothing that I can do about it. tell my wife, why are we paying that preschool to get me sick all the time? This isn't fair. Kids get sick all the time. Can't avoid it. Of course, they drag you through the mud when that happens. But I didn't get that sick this time. It didn't hit me as much, which is a good thing. So let's see. Come on, come on. Make it happen. Don't be so difficult. The thing about NinjaTrader is that it's not the platform. It's my indicators. My indicators take a tremendous amount of memory. And so it takes time for it to populate again. But it's okay, because now that they're bringing out Ninja 8, as soon as they give me the green light, Ninja 8 will take up less memory, and we won't have this problem. Now, here's another thing. When I'm training you, I can only use one chart because GoToWebinar takes up a tremendous amount of memory as well. Normally, I trade with 3 charts, but I can trade off of 1 chart. I can show you how to trade with 2 monitors using 3 charts, and believe me, I'll make your head spin in such a way that you will become a chess master at trading. A poker giant at trading, because I'm going to teach you all the ins and outs that you need to look at to identify these trades that no one out there really understands. And the only reason why is because these are inside trade secrets that many people many retail traders just don't understand, and I understand that. But I love to share my knowledge and wisdom with people because I want to level the playing field for you. I want to make this something that you can say, okay, this isn't that hard. And you're right, it's not supposed to. Lee, you missed it. We had 5 trades, buddy. We only had 1 stop loss, 5 ticks in crude, but 4 trades that were just amazing. You'll see the recordings. I'll put it on YouTube. Come on already. Stop being so difficult. All right, here it is. Okay, so here we have volume divergence. Now, when we look at this, pound CAD, we're saying CAD up, pound down. That's normally what we're thinking, but this is at an extreme already. So it's already gone down, but in this case, we're looking to see how extreme is it. And don't ask how I got the volume indicator up there. So here, what we have here is we actually have volume divergence to the upside. And we have price action to the downside. Now, we both know that this concept cannot exist with one another. However, we had volume divergence here. This ain't over yet. This could still go down. So that's why I'm not pulling the trigger yet, because I'm afraid that it still has room to go down further. And if it does, then it would probably be the last one, because see the point of control here? The buyers, they don't want to buy at a lower price anymore. The sellers want to sell, but the buyers don't. So I would actually let this candle play to the downside further, because it's going to be short-lived, and then go long. Because if it doesn't go, then it's not going to go. See, at this point, it doesn't look like it's going to go, so I'm just getting ready. But I'm thinking long. Now, if I'm right about this, then it's just a matter of time. So let's just let them give us time. It's at 188 even. It's 188.01, but I'm still thinking that it still could come down. But it's setting up to go long. So the question is, if we take this trade, see, look at that, would have made 2 pips right now, probably would have made the spread. Oh, 3 pips, that hurts. But it's treacherous. It's a treacherous trade. So temptation is too big, don't do it. Don't do it, don't do it, wait for it. It's not the signal that we look for. We look for a specific signal. This isn't it. So you have to be disciplined enough to say, not yet. This is saying the CAD's going to get strong, the pound's going to continue to weaken. So does that mean that this is going to go up and then come down, and that the next trend dot would be our entry? Potentially it could. Yes, but it ain't over yet. Now, the euro's at an all-time high. The pound is low. So we could also look at the euro pound because it's at extremes as well as the euro dollar. These are extremes that they can't sustain for much long. So it means that they have to rebalance. To me, this one looks like it could rebalance, And if it does, this one is a much better candidate, and we probably would have made 10 pips, 11 pips by now, you see? So at this point, you just want to wait. I know we missed the entry. We could have been up right now another few pips, but sometimes it's better to just be patient and wait. See, this is what I was afraid of, that they're going to come right back down, and then they're going to hit it to the downside one more time. I think they got one more candle to the downside before they actually make the move. So at this point, I'm just not sold on it. And you have to be willing to say to yourself, if I'm not sold on this trade, why would I get in at all? We've had so far 4 great successful trades. And we've only had one where we, basically stopped ourselves out with a 5-tick loss, which is nothing. Even though this trade may play out, I wasn't sold on it because it didn't give me my terms. I look for specific terms in a trade. If I don't get those terms in that trade, then I don't take it. And that's what this is about. This is about you understanding that we have certain rules that we adhere to. If we stick to our rules, we will have success. Why? Because even though you may make mistakes, it's a human thing to do. If you have a strategy and you stick to it, normally that strategy will give. See, look at this. We would have made 25 pips on this trade. I don't feel bad about it. We've already beaten them today. Into submission is what we've done. So now, if we miss a trade, it's okay. It would have been 25 pips right now. Here's the problem that I have with this trade. There's a trend dot that's going to form right here. And because this did not go above it, and this is telling us that the CAD is going to strengthen against the pound further, then even though it retraced up, which it did, and it did a very good job, I like down. And so if it's a 25 right here, 26, 27, 28, guess what? I'm thinking from this point, it's already moved too much, must come down. I'll take the trade to the downside, and I will risk 5 pips. That's what my risk will be. 5 pips. Now, if I'm right, then they come down. If I'm wrong, then I get out with a 5-pip loss, and I'm okay with that. So let's see what happens here. Because there's something wrong with what they're telling us. There's still volume divergence to the downside. I may be wrong. In this case, it looks like I am. And so at this point, when I'm wrong, and I have to stick to my rules and just basically get out. So I took a loss. I knew that it wasn't going to be probably the best trade. It didn't have my terms, and so I gave back something that I already made. Can I make it up? Yeah. Now I have to go look for a 6th trade. But remember, see, this is what happens when you don't stick to your plan. If you don't stick to your plan, they will stick to theirs, and they will stick you with their plan. So in this case, I'm still thinking that this thing has the potential to come down, but I'm not sold on it. They went up a little bit too high, and I think that they're actually going to rebalance it right back up and actually do what's called mean reversion, which is come right back up to the mean. But I already made a mistake with this one. And normally when I make a mistake with a trade, I'll usually take a step back and reassess. Because, from 188 to 88.40. That's a 40 pip move. I wish I would have taken it here, but wasn't on my terms. I knew that it possibly wasn't going to go down any further, but it wasn't on my terms. So it is what it is. And now, see, now it's coming down. Treacherous. But still, I'd be down. You know, still about 7 pips, 6 pips. So it wouldn't have made a difference because it still has a potential to go back up. And more than likely come right back up here. Question is, should I go back in? It's not on my terms. Again, you know, it's a trade that's not trading on my terms, and because it's not trading on my terms, I can't. So I have to go look for something else that may give me the terms. The euro dollar looks like it's going to give us terms really quickly. This is at extremes, and they're not going to hold. And see, look, start to come down. Treacherous. That's all right. We'll find another one. We will avenge the treachery. But we don't do revenge trading either. Again, there is no revenge trading here. Let's look at that euro. Oh, it hasn't changed. Isn't that a trip? And look, it's starting to, but not quite. Euro USD. See, look at that. That was a treacherous trade. But it has bullish volume. Look at the volume up here. It's still bullish. See, this is treachery at its worst. I wouldn't jump into this trade. I'd be exiting the trade. Let's go look at that Euro USD, because that Euro USD looks like it might be a great trade. It moved 165 pips up. Guess what? That's a big move. There has to be some type of rebalancing. Now I'm afraid that there's still an hour and some left. But we made, you know, out of 6 trades, 5 great trades so far. We are not down. We are so up, it's not even funny. When we post this video up on YouTube later today, you can go back to it, and if you missed the beginning, you'll be able to see, you know, how we did from the very beginning, which was just exceptional. When we forecasted the US yen to go short before the announcement. So here the euro has made a tremendous move. Let's quantify with the ruler what the total move was from here to here. 180 pips. That's a big move. Now, for all we know, this thing could go up another 20 pips. Make a 200 pip run. I would actually question going short here. I know that it must rebalance, but I don't think it's going to rebalance yet. And so, because the jobs report was so bad for the U.S., at this point, I can't really say that we have a trade that we can find that maybe, I mean, I like the euro pound just as much, but I feel the euro is just going to continue to go up. I mean, it's at all-time highs. There is nothing here that would demonstrate anything different. So I don't really see anything else that I would be interested in except for the Euro USD going short at this point. But it has to be on my terms. So that means that this candle has to settle with negative volume. If it settles with negative volume, then at that point I may be interested, and then I have to wait for the next candle. But in this case, it has bullish volume, which is not good. So if this one settled with a bearish candle, it would be the candle pattern that I normally look for, but because there would be an imbalance between price action of the candle and the points of control, but I would need to see volume as well. And right now there's too much bullish volume in this trade for me to say go short. No. Excuse me. It's still a bullish trade. It's still a bullish trade, so there is nothing there for us. And again, this trade would be like that pound CAD trade, where the retracement could be good, but I'm already down on one trade. So on this last trade, now I'm even more cautious because I'm not going to give up more than what I've already taken from them. So now it's a matter of just being patient and waiting. Now, this tells us, this candle, because it settled the way it did, and because it settled with slightly bullish volume, it tells us that this thing could go up another 15, 20 pips, and then we can look for the reversal. That is usually the case, because that means that they're setting up for it. So this thing has the potential to continue to move up a little further before it comes down. So now it's just a matter of really waiting, and they could be waiting for the action, for the open of the of the exchanges at this point. So it's just a matter of really being patient and letting them just wait, making us wait. I mean, you'll see it go up. You will see this thing go right back up. For all intents and purposes, it could go up another 20 pips from here. 180 pip move right off of NFP is a pretty strong move. See, it's not clear. It's still bullish, and it was bullish from here. See, the point of control here is below, then everything else started to go up, and it's maintained above ever since. This would be the first one with negative volume. Now, just because it's negative doesn't mean that it's going to go down, but, they say when in Rome. I'm willing, see, with this trade, I'm not willing to risk actually 5 pips on this. I just don't think it's ready to come down. I'd actually wait. Normally, if it's the way that it opened, which I'm not sold on, because it could come down and then bounce off the trend dot here once it forms. It's too much of an aggressive move to be to be gambling. I'm not going to gamble with this trade. I'm going to wait. I'm going to wait. That would have been 2 pips, 1 pip, 2 pips, 3 pips, 4 pips, 5 pips. Let's see what it does. And it's just beginning. See, that's what concerns me. This candle is halfway through. So I'm not, like I said, the next trend dot is right here, and that's what I was afraid of, that they would use it as a support level to go back up. See, too much risk at this point. U.S. dollar index plunges by most since February 3rd. Oh joy. Nothing. Yeah, see, at this point, if there's nothing, then sometimes you just have to know when to walk away from trade and keep what you've made. And I think that right now, we've made enough that one loss is not going to hinder us from everything that we have accomplished this day. Sometimes it's better to just walk away from trade. I just don't see anything right now. Everything is moved already, and maybe within the next half hour there may be a trade, but you got to know when it's enough, when to say, I did well for this session, I did it early, and I'm done. And that's where we're at right now. We did well for the session, we did it early on, and we're done. And that's it. So I'm going to say adieu. Thank you for joining us today here at Phoenix Trading Strategies for Non-Farm Payroll. It was an exciting morning. We accomplished a lot, did some great trades, but right now I think that it's time for us to basically say goodbye to the trade. You can look for some trades, within the next half hour. I'm sure that there will be some, but I think that it's really not necessary. We won. We won, and we won a lot, and that's what matters. So thank you for joining us. For those of you that have questions, feel free to send me an email. More than happy to answer any questions. We will be back Monday morning at the same time, actually at 9 a.m. Eastern. Today was non-farm payroll, so it's a little different. We were going to basically start early. If you have any questions, you can also give me a call at 818-431-1357. Thank you so much for joining us, and I do look forward to seeing you Monday morning. Have a great day. Bye-bye now. And have a great weekend.